statement of financial position. Now let's proceed to the next part. We have to put capital plus profit and drawings. So let's put the capital. The capital has been given in the balance. It is just 80,000. There was no other capital introduced. So let's put it around 80,000. Capital will not include the bank loan. The bank loan will come under current and non-current liability. So let's put here capital alone. And next we have to include he maintains a fixed capital account. All drawings and profit appropriations are made through his current account. So let's put that in the current account. So his current account had already got a balance. So the first we have to put the current account, and we will start off with the current account balance which was given for the Raj. This was credit, so you start off with a positive balance. If it was a debit, you should start off with a negative balance. So it is a credit balance, so it is exactly, we have to write 6,700. If it was given DR, you should be writing negative, okay, as a negative amount. So the balance was around 6,700. Let's write that. So this is the balance that was given in the Raj current account, 6,700. So let's write the balance. Then we had already calculated net profit in the income statement. So it was done in the previous video. So the net profit was calculated around 12,200. So let's write net profit. So let's write the net profit. This was around 12,200. Next we have the drawings. The drawings was around 22,900. It was already adjusted because there was an error that had happened in the books that was mentioned. So this was also accounted or answered in the other video for error correction and journal entries. So the drawings made by Raj 900 had been posted to the wages account, so it was not included in this. So I'm going to get extra drawings. So 22,000 plus 900 should be 22,900. So that is what I'm writing here. Now let's calculate balance. Drawings have to be subtracted. So balance plus net profit minus the drawings will give me the current account balance. So if we see, we have a negative balance of 4,000. Let's put that. So the current account balance became a debit balance. So that's why it's showing 4,000 negative. So 6,700 plus 12,200 minus 22,900, so it has become a negative balance. Now let's add up capital minus this drawings. Usually you add up, if it was a positive value you just add up capital and this balance, but because it's a negative you just subtract 80,000 minus 4,000, that is equal to 76,000. Now let's proceed to the non-current liabilities. In the additional information it has been given that 5% bank loan, half of it has to be paid this year, repayable loan. It is a repayable loan, half of which I have to pay off this year. So the remaining half will be paid in 2020. So the 5% bank loan that remains in the non-current liabilities will be just around 30,000, which is half of the 60,000 loan. So this was already calculated. This was also done in the previous video. So the 5%, half of the loan is repayable on 1st Jan 2020 and this remaining is going to be 2021. So that's why I'm going to write 30,000 will still be remaining as non-current liability. I still will have time to pay it, whereas my current liabilities are going to be this 5% loan, trade payables and other payables. So let's write that. First let's write trade payables. I have to pay within a year, so let's write that. So this also had to be accounted, 1,800 had to be accounted. So it is 26,550 because a purchase return had happened. So my trade payables will be 28,350 minus 1,800, that is 26,550. So that is what I'm supposed to pay. $550. It is just 26,550. Then I have to put the 5% bank loan. 5% bank loan is that becomes a current liability is around 30,000. So let's put that. The bank loan interest is an expense that has already been accounted. Only because I'm still have to pay half of the loan, I'm putting around 30,000 becomes a current liability. Now let's put the other payables. So one is 3,700 and the other one is the 1,300. So both are accrued expense and they need to be paid immediately. So bank loan interest still was owed expense or accrued expense. So it becomes other payables. So 1,300 becomes other payables. And also the wages were accrued. So this was 3,700. So that was also become other payables. It's a current liability. I need to pay within this time, within this year. Accrued expense. So even the wages had become accrued. So I'm calling it as accrued expense, which is a current liability or it is an other payable. So let's add up these two and write. So let's write 26,550 plus 30,000 plus other payables. When I add up 3,700 plus 1,300, it is going to be equal to 5,000. So let's add up the total capital and liabilities. So when I add up 76,000 plus 30,000 plus 61,550, I'll be getting around 167,550